I discount our action today, and I discount our action from Wednesday just because light volume, not a lot of people coming in on the train, so not many people trading at their desk. So you definitely see a lot more volatility on days like today. So I'm not going to put too much weight in what we're seeing today. But overall, it's been a rough week for the market. It's been a rough month for the market. I think we are going to continue to see a little bit of more pressure here as we continue to test the lows. But next week, a lot on the calendar for next week. We continue with earnings seasons. Powell's going to be speaking, G20. We're going to get FOMC minutes. All of this, I think, will set us up for a rally, not a big one, and it's not going to start next week. Second, third week of December, we'll start to see it.
Jack, what sort of signals are you expecting next week, either from President Xi and President Trump or from Jay Powell? Both issues remain front and center, trade and the Fed.
Well, you know, both of those things are really being driven by what's happening in the price action. If you look at what's happening, say, on the inflation front, all of that inflationary pressure that we heard about by those CEOs over the course of this last earnings period have disappeared. So now you've got energy 20, 30% lower. Guess what? The first quarter of next year, we're going to start seeing some great numbers, and operating margins are going to increase. So all of that is not really something that's being factored into pricing right now. And the other thing, as far as inflation goes, and this is something that really isn't being talked about, is if you take out tariffs, and let's do this academic exercise, then we're really dealing with disinflationary pressure. And I say that only because, if we see a good headline come out of that G20, we are literally one good headline away from seeing this market snap back 1,000 Dow points in a couple of sessions. And it's going to be that kind of rally where a lot of these portfolio managers that did not take advantage of the second 10% dip in a year are going to be looking for work in January.
Jack, I just want to ask your view in terms of where you think yields are at this point in the cycle. I mean, we're talking to Rick earlier in the week saying that the likes of the 10-year probably peaked for any sort of medium-term time horizon. What's your take?
I think he's absolutely right. In fact, a lot of that has to do with the fact that there is no inflation out there. I think that's what the long end of the yield curve is telling us. I think it's being misinterpreted. Too much is being read into the fact that we're looking at this global slowdown. The reality is no. We're looking at a lack of inflation, and that's essentially what the bond market is telling Jay Powell and the Fed. So I think, yes, I think that we've seen 10-year yields peak. I would not be surprised to see it flatten, the yield curve flatten even more, but I would be very surprised to see it invert, especially with corporations as strong as they are.
Quint, why are you watching financials? What signals are you getting from that group?
Well, I guess I'm the odd man out here, Sarah, because I am not optimistic. In fact, one of the things that concerns me is the general optimism surrounding seasonality, or the fact that we've, quote, gone too far, or that we're due for a snapback, et cetera. The selling pressure in some key areas, everybody's focused on technology, and I realize that has been brutal, but the financials have lagged, and they are speaking volumes in an environment that is supposed to be very beneficial for the banks. In addition, their quarterly reports have been exceptional, yet they're all selling off. My concern is that sector is giving us an indication that there is more pain to come. I think it's a result of what's happening in Europe with the likes of Deutsche Bank and possibly counterparty risk. But what concerns me above all else is the psychology, the emotions. Everyone has become so complacent. It's a 10% dip. It's a buying opportunity. I think that we are going to be sadly mistaken with that idea. And if we do get a bounce, a snapback rally like we saw just the other day, it's an opportunity to sell.